I want it to be very, very interactive. Okay. So kindly use your chart. What kind of a trader do you want to become, or do you want, or what kind of a trader are you already, and which you want to improve your skill? Boom and crash trader, volatility index trader, or currency pair trader? After all your words, I would also give you guys some advice in order to help you. So kindly use your chart. If you can hear me clearly, please use your chart, okay? And do not turn on your mics so that you wouldn't distract the meeting. I want boom and crash trader. Okay, someone just commented. All right, let me see your chart. Let me see your chart. If the meeting is not interactive, guys, it means I would have to leave the meeting. So let it be very interactive, okay? All I want this year is to help a lot of you rise. I want to help a lot of you rise. There is no need you being in my community, following me, and there is nothing, no achievement or no impact. All right, so I need to see traders rising. As of last year, we were, by the grace of God, we were able to raise about 400 and something students, both boom and crash, volatility, and currency pair altogether, about 400 and something students last year, 2021. And this year, I want to see myself raising at least 500 plus. So that is why I want to start energizing you guys, because, you know, if you're not motivated, some of you might likely be giving up because of maybe the losses you're making. Sometimes you begin to feel like, man, this trading of a thing is not real. Come on, trading is real and trading is paying. All right. So it's all about you being motivated, you being taught, you being someone showing you the way to follow in order for you to be able to start getting profitable in your trading career. Okay, so some people said one boom and crash, know the fundamentals to be able to trade anything on the forex markets. Volatility in 75, boom and crash, VIX, currencies and indices, boom and crash volatility, currency pairs. Okay. All right. So while you keep your charts coming in, I'll keep reading it. So guys, as a trader, or as one who is aspiring to be a trader, all right, there are certain things that you must understand as a trader. You must understand that this trading of a thing, number one, is not a get rich quick business, but it's a real business that pays. All right. It's not a get rich quick business, but it's a real business that does what? That pays, and it pays big time. As you can get rich in few days or even a week with forex. At the same time, forex can also swap all your money which you invest in the markets, which sometimes is devastating to some traders. All right, but don't get it twisted. Trading pays. Okay. Now, a lot of you said you want to be good at boom and crash. Some say volatility, some currency pairs, some the three of the markets. It's not a bad idea. Okay, if you trade the three markets, like I do trade the three markets, you know, for a long time now, I've been stuck on boom and crash and volatilities. Okay, boom and crash and volatilities. But of recent, I started focusing more on my currency pairs. And if care is not taken with time, I might likely divert full time to currency pairs, because there are things that you would begin to understand when you start trading currency pairs. The currency pair market is not as volatile as the volatility index markets, or would I say the synthetic? So both the boom and crash. The currency pair market is not as volatile as the synthetic index markets. So I would also advise some of you to start putting your head into currency pairs. Okay, is a wonderful market, a very wonderful market, though it's being traded Mondays to Fridays. All right, then the synthetic is both Saturdays and both Sundays. Now, one thing about the currency pair is, by the time you trade Monday to Friday, by Saturday, Sunday, you rest, right? By Saturday, Sunday, you do what? You rest. By Sunday evening, you flip yourself into the chart again, looking out for what will happen within the week. So I'm going to take you guys straight to the chart soon so that we look into the market, what might likely happen this week and what you might likely expect. All right. But we're going to look both into boom and crash. We're going to look into VIX and also look into the forex currency pairs. So if you're following me on Twitter, all right, right in my Twitter, I will be giving updates. I'll be giving analysis. I'll be giving a lot of educative things that you would really need as a trader, but it's going to be much based on currency pairs though, right? My analysis is going to be based on currency pairs. Then any forex advice is based on any of the forex, anything forex, be synthetic, okay? So I would advise that you guys use the link in the Telegram channel and follow me on Twitter, because that's where I'm going to be based more now. All right, so let's go straight into my chart. Before I go into my chart, I want to hear from you guys, okay, as traders. What do you find difficult in your trading career, or what would you love to improve in your trading career? Speak to me, traders. Just turn on your mic. All right, just turn on your mic, one after the other. In your trading career, what do you find difficult, and what would you love to improve as a trader? First of all, you can just turn on your mic, tell us your name, okay? Tell us your name and what markets you love to trade and what you want to improve. Would like to improve my entries. Okay, someone said he would love to improve his entries. Okay, any other thing? Talk to me, traders. I would love to improve my entries on volatility. Okay, okay. Use the chat. I want to use your words to know what to teach you. I struggle with entries. What exactly do I look at before entering? Okay. All right. So talk to me, guys. Talk to me, guys. What do you find difficult? Yeah, someone lifted up his hand. All right. You can unmute yourself, Mr. Ben Great, and talk if you want to say something. I would love to improve my price action.
Yeah, good evening. Good evening, Legend.
Yeah, you're welcome, Mr. Ben Great.
Yeah, my name is Mr. Ben Great. I'm from Nigeria.
Okay.
I started following you. I started following your page a while ago, and it has been awesome from your teachings and the way you analyze the market. In fact, I fell in love with your analysis. The problem and challenges I'm having is that entries on my boom and crash and volatility 75, volatility 50 has been my major challenge. I find it extremely difficult to raise my account. When I raise an account, I see it falling and I lose money. So I want to actually raise my account and
Can you all hear me, traders? Can you hear me? Can you hear me? Also, multi-time frame analysis. How does it work? How many time frames? Okay. I was able to get quite a lot of words from you, Mr. Ben Greats. I hope you all can hear me, please. I had a little interruption in my network. If you can hear me, just comment, yes, I hear you. Can you hear me? Can you hear me? Can you hear me? Can you hear me, traders? Talk to me. Yes. All right. Okay.
Yes, we can hear you.
All right, guys. Just turn off your mic. Let's get into the chart. So, one thing that a lot of traders always find difficult in trading, in fact, there's a lot of things, actually. There's a lot of things that traders find difficult when it comes to trading the FX markets. And number one is how to run the analysis. Number two is how to catch their entries. Number three, how to control their emotions, because it's not just about getting entries. Sometimes you actually get good entries, but your emotions don't let you stay in that market and win the markets. You understand? So you, as a trader, you also have to learn to do what? To control your emotions. Very, very, very important in your trading career. All right. Please make sure you stay active with the charts so that we know that you guys are still live online, because I think I'm having a few errors on network. All right. So let me read a few more messages before I proceed. I would love to improve price action. Also multi-time frame. How does it work? How many time frame must I, all right. I like to have a good trading system. Becoming trading is boom and crash. Most times I expect the market to be support or resistance. Instead it breaks and ban and goes wherever it wants. I get discouraged. Okay, now that's one disadvantage of boom and crash sometimes, boom and crash sometimes don't actually respect price action. All right, it doesn't respect price action like other markets do. And that's because of the amount of volatilities that go through it. All right, even the VIX 75 sometimes don't respect price action, because the amount of volatility that goes through it is so huge that, man, your analysis sometimes is being disrespected. That's, anyway, by the name, you should know what it's called. Volatility Index is a volatile market, okay? So it's very volatile. That is why I started diving into currency pairs lately, because I know I'm making the money actually from synthetic index markets, but I think I need to dive into currency pairs. And I'll give you guys the reason why I'm gradually diving into currency pairs. Maybe you remind me later, all right? I'll tell you guys the reason. So now for your analysis, somebody talked about multi-time frame analysis. When we say multi-time frame analysis, what is the meaning of multi-time frame? Emotion is the biggest challenge holding too much losses. Okay. When we say multi-time frame analysis, what does that really mean? Multi-time frame analysis simply means running your analysis with more than one time frame. Okay, running your analysis with more than one time frame. Back then when I started learning how to trade, when I just get into the chart, all I want to do is nothing else but just go straight to 1 minute time frame. And by the time I go to 1 minute time frame, I want to look for where to buy or where to sell. That was what I used to do back then when I started trading newly, when I hadn't even gone for any trading academy, when I've not learned anything. All I look at is nothing else but 1 minute time frame, 1 minute time frame. One minute time frame, 1 minute time frame. But as a trader, if you must be able to understand where the market is going, you don't need 1 minute time frame alone. You need more than one time frame. You need more than one time frame. So the reason why you actually need more than one time frame is because you want to be able to understand what the market is doing, where the market is going, and where the market might likely go next. Tim, can you kindly explain to us for how long you traded before using a system, and do you still use one? All right, we'll get into all your questions gradually. All right, I just hope network permits. So you don't need, if you look at it, your chart from a 1 minute time frame like this, you really don't know where the market is going, because this is what we call noise in the markets. Okay, this is what we call what? Noise in the markets. Why do I call it noise? You call it noise because the way it's moving right now, it can be so deceiving. You might likely see it and say, wow, it's bullish, let's buy. And you see it falling. Why? Because there are things that this market is actually respecting, which are coming from the higher time frames. So with the way I've upgraded in my trading lifestyle, I actually don't use the 1 minute time frame anymore. I actually don't use the 1 minute time frame anymore to trade both in boom and crash, both in VIX or even the currency pair. I trade from 15-minute time frame now. You understand? As of last year, I was actually trading from the 5-minute time frame, but my skill has actually upgraded to a level where I don't need the those lower time frames any longer. But there are times when you actually need to go to those lower time frames to confirm some certain things, depending on your kind of strategy. All right. So for me, when I analyze my market, I first start from my daily time frame. Okay, I start first from daily time frame, because why you want to go to daily time frame is because you want to understand what the price structure is all about. I believe a lot of you are actually new to trading. You might not understand some terms that I might be using. All right. I think I will still have to make out time for beginners very soon. So you want to understand what the market structure is all about. When I say market structure, I mean the market movements. What is the market building? What's the structure? You know, just like for instance, you want to build a house, they say a structure. Okay, so you want to understand what the market is building. Now, for instance, we have price building something like this. I need to get, okay, polyline. We have market building what we call the higher high. I hope I'm seeing this thing. All right, I'll delete this. I'll delete this. Okay, traders, just give me 2 minutes and I want to set up something. Just give me 2 minutes. I'll be with you right now. Okay. Hey, who turned on his mic? Who turned on his mic? Come on, guys. Turn off your mic, guys. Turn off your mic, please. Let's not have a noisy background. Okay, let's get back to where we were. Okay. All right, welcome back, guys. So as a trader, you want to first of all go to a higher time frame. And I told you guys earlier that the reason why you want to go to a higher time frame is why? Because you want to know the structure of markets. What is markets building? All right. And for it, we have two types of traders. They are scalpers and they are what? Trend traders. Okay. They are swing traders also. Okay. Now, for me, I'm a day trader. I'm a trend trader. I mean to say, I don't like scalping because scalping sometimes might likely result to gambling. You understand? So I don't like scalping. I love to trade along with the trend. Trading along with the trend means you see where the trend is going and you're trading along with it. If the trend is bullish, you're only going bullish on every trade you take. All right. So now in the daily time frame for the volatility 75, we're going to be running a straight analysis so that we can know what to look out for this week. Okay. First thing you want to do as a trader analyzing your market, you want to zoom out. Okay. So you can be able to see everything seeable. Okay. Nothing should be hidden. You want to see everything that has happened in the past. Now with this, what I see clearly is that volatility 75 so far so good in between 2021, okay, between 2021 to current, this has been the highest high. So what I want to do is to mark it out. So I'll mark it out with an horizontal line like this. I'll increase the weights and then change the color. Okay. So now that I've marked that out, the next thing I want to do is I think I need to bring out all this to my favorite list. These are the things these are the tools I need. I would need this. Need a polyline. The polyline is already there. Okay, and then all right. So we move. All right, I need my square. Very important. I don't joke with this rectangle. Okay, so guys, just be getting used to the tools I use so that you start learning how to use them also. Okay. All right. So now I have the highest high so far in VIX 75, and then the lowest low is this between 2021. That is okay, between 2021 to date. This has been the lowest low, and this low was able to push market really high in the past. And when price came back to it, it respected and still pushed high again. Now, me looking at this as a trader, all right, I don't actually need someone to tell me that price is heading back straight up to this zone, because this has just given me a first touch. So far, so good. At least there has to be second touch to probably third touch, you understand, before you can experience any rough move. So man, looking at this, I already know that VIX 75 might be moving to the top side in the nearest future. But before it goes to that top side, it has to go through a lot of, you understand, ups and downs in the markets. All right, so now I have the highest high, I have the lowest low, and that's that for that. Now, what I want to see is currently, where is the market heading to? I can see clearly that the market is heading to where? The upside. Market is heading straight to where the upside. Market has given me a first touch. I need something. Okay. Market has given me a first touch here. And has also given me a second touch here in the past. All right. The market moves in up waves, down waves, up higher highs, lower lows, higher lows, lower highs. All right. And now I've gotten a first touch here, get on a second touch. There's every probability that there will have to be a third touch anytime soon, because price cannot just keep going straight up till it gets there for you. You know that it has to go through push phases, you understand? So you should be expecting a third touch anytime soon in the markets. All right, a third touch anytime soon in the markets as a trader. That is what you should know. Now, we're done with the daily time frame because now we have pictured out what market is doing. Now, as a trader, you must always ask yourself questions. Don't just look at any time frame and draw any line and you exit from the market. You must ask yourself questions before you exit from that market. Right here now, I have looked at the daily time frame. What did I see? Now, let me hear from you guys. What are you able to spot out in this daily time frame before we forge ahead to a lower time frame? What were you able to spot out? Use your chat box. Use your chat box. What have you been able to spot out so far in this daily time frame? So as a trader, you must always ask yourself questions. Every single time frame, there's something to talk about, because it's what you're able to spot out in this time frame that you'll be able to use to align it with the next time frame. You understand? One thing I always advise my traders is if you are a trader who works with 4 time frames, if 3 of your time frames, or if 2, in fact 2 is small, if 3 of your time frame does not align together, don't trade that market. It means the market is confusing. And if your market is confusing, don't force yourself to trade it. That is one thing a lot of traders don't figure out, or a lot of traders is one mistake a lot of traders make. Do you want to trade that market by force? You want to look for entries anywhere, which is not meant to be. Okay, so if you're working with 4 time frames, probably your lookout time frame, your entry time frame, your observation time frame, and so on. If 3 of your time frames does not align together, that market is a confusing market, or maybe you're just confused, you don't understand it yet. Okay, so now I can see a lot of people say VIX is an uptrend, market is bullish, uptrend is going to the upside. Very well. Now we've been able to spot out from the daily time frame that market is in an uptrend. All right, in an what? Uptrend. Now we forge on to 4-hour time frame. We forge on to 4-hour time frame. As a trader, you can use any time frame. Okay, for me, I use daily, I use 4 hour, I use 1 hour, and I use 15 minutes to take my entries. All right, so you can decide you want to use 8 hours. It all depends on your kind of strategy. Please do not turn on your mic, please, so that you don't confuse or all right, thank you. So now we're able to spot out that market is in an uptrend in the VIX market from the daily time frame. We still bring out this line again. Okay, so now we are in a lower time frame. Now, the lower you go, the lower time frames you go, and you're able to spot out the same thing that you saw on higher time frames, is the better. Okay, but if you're going lower and you're beginning to see something different, is not making sense. I need to update my data. My data is almost finished. You guys, just give me 2 minutes. Let me add more data to my subscription. It's going to the upside. All right. Neat. All right, welcome back, guys. All right, so what we can see clearly now is the price is what? Price is currently bullish, bullish, and bullish. Now, what do you really want to find out? When you find out that price is making a particular kind of movement, what's the next thing that comes to your mind? Does institutional kind of work for volatility pairs? Yes, it does. Institutional works for volatility pairs. Institutional are those who are moving the markets. So they will always have their own strategies. So it will always work in the market, all right? So for our charts, price is going to the upside. So we will have to zoom in so we can see clearly and be able to understand what is happening. So already with the idea we've gotten from daily time frame, what we saw is that price is going to the upside. Now, the next thing you want to do is you want to look for the support levels that we can be able to find out. All right, so we have this around here. Let me increase the weight so I can see it clearly. All right, so this is a strong support zone. That's what it simply means, because price has played around on this same zone a long time. And after price played around, this is what we call fake outs. Price played a prank on a lot of traders, and I know a lot of people fell prey to this. Let me see how many pips. About 27 pips. 27 pips prank. All right, it's more than 27 pips. Let me see again. Okay, 40 pips prank. Price played a 40 pips prank against traders. You know what I mean by prank? A lot of traders, when this thing broke out, a lot of traders say, wow, it has broken out, let's sell, only to find price zooming back now with full force to the upside. Now imagine that prank. Imagine this prank. And this is one of the things that a lot of traders fall prey to. Now, price was ranging after a very long time here. After this prank, look at the speed price is using to go bullish to the upside. What a big prank. And a lot of traders must have fallen for it. That is why it's good when you are more of a trend trader, because you trade along with the trend. Okay. When you're swing trading or when you're scalping, it can be so devastating when you fall prey to things like this. All right. So now price is actually going back to the upside after a long time range. In case if you're a new trader, when I say range, I mean is a range is simply an area where price is going up, down, not giving you a particular bullish direction or bearish direction, just moving straight up, down. All right, so that's what I mean by a range. Okay, so now price is currently going bullish again. Now we're able to get a quote for the 4-hour chart. So if I ask you what you saw in the 4-hour chart, you should be able to explain what is currently happening now. Price is just coming out from a fresh range. All right. Now, the next question you want to ask yourself is, where is it heading to? So far, so good. We can see that this high was greater than this high. It simply means price is heading to this other high. So you can actually map that out as your let me bring out all right, we've got that as resistance. This was also another fake out. A lot of things that you guys need to really understand about how market plays. See, when price ranges for a long time, there's always a prank before the real move. Look at after ranging, look at the prank he played, and after the prank, see a massive bearish move. So this I can also give you an idea of this right now. After this prank, this is going to be a massive bullish move. Already you have the idea that this is where price is heading to after a long time trend. This is where price is actually heading to. So you don't need someone to even tell you what is actually happening in the markets. These are what we call trading ideas. You create the ideas, okay? You want to judge the market by what it's doing. So we already know that price is heading here. So it might likely have to struggle here because of this struggle that it had in the past. All right, because of this struggle it had in the past. Let's see. All right, so it's freshly breaking out of the zone. So there's tendency that if this guy breaks out, is going to struggle here again. All right, it's going to struggle here again. And anything can happen in forex. All right, it might likely break out and continue, or it might likely come back down. You never can tell. But this is exactly what price is about to do. So for those trading VIX 75, you should be looking out to go bullish this week until price gets to this resistance zone, and then we see what next. If it's able to break out, we know that this is the next place to look out for. So already in the 4-hour chart, we're able to understand what market is actually doing. So we don't need anybody to explain that further to us. So we go straight to the 1-hour time frame to see clearly what is happening on this breakouts. Let's see what's happening on this breakouts. If price is really ready to go up higher, or if it's gonna likely come back down. Let's see in the 1-hour chart. My network, okay. Right in the 1-hour chart, what can we see? All right, there's nothing much to talk about in the 1-hour chart until price gives us the real movement, because already we can see that there were a lot of fake outs here in the past. Okay, there were a lot of fake outs here in the past. So there were a lot of fake outs here in the past. So there's tendency that there might likely be another fake out. But since it was a first fake out, second fake out, third fake out, we might likely have a good move. We might likely have a good move that is to be considered a real breakout anytime soon. So we don't know what might likely happen. Already we can see that price has actually, if you zoom it out, you can actually see clearly that price has actually gotten to that zone. Just let's zoom it out like this. You'll see that price has actually gotten to that zone. You see, it's gotten to that zone and already is going back down. It's going back down. So could it be that it has respected the fake out or what? You never can tell. So this is where we talk about traders' patience. You want to be patient. You don't just have to rush in and say, it's bullish, buy. It will go bullish. It will go. When you haven't confirmed if truly it will go bullish, okay? So you want to always learn to be what? Patient as a trader. Learn to be patient until you get good confirmations. Don't trade. Don't force yourself. Don't force the markets. I always tell my students, you set your traps for the market and let the market fall into your trap. You don't fall into the market's trap. Falling into the market's trap is you jumping in without proper analysis. Okay? So right now, I would advise anybody who wants to enter the VIX 75 to stay put. Okay? Don't buy yet. Don't sell anything yet. Just stay put till you get a good understanding of where the market is going to. So if you want to go bullish, this is what you only want to see to go bullish. You want to see that breakout. Okay? You want to see a retest before you look forward to what? Buying. If you don't see that, don't jump into it so that you don't fall for a fake out, okay? And it's going to be a wonderful one if it ends up breaking out, because from here to here is about, let's see, 47,000 pips or what? Let me see clearly. Let me just delete that. Let me use my ruler. From here to here is about 482 pips. 482 pips. That's a good one. All right, if you can catch that move. So, but you have to be patient. All right, please use your chat box in case if you, as we are analyzing the market, if you have anything any question you want to ask, just be dropping on the chat box so I will be able to use it to know what to talk more about for you guys. So for VIX 75 guys, this week, just stay put. All right, between 796,132 and 67549. All right, you want to just wait for market to break out between those two zones before you do anything. All right. One mistake traders do make again is this. Now look exactly the way I have mapped out this thing here. All right, a lot of traders will say it has broken out. A lot of traders will say, oh, it has broken out. I'm waiting for a retest from here and I will buy. But you're not sure. All right, because if you look, this same zone had a fake outs. So you don't want to use this zone as your breakout and retest lookout. You don't want to use this zone to look out for breakout and retest. It's not legal, because anybody who tried it in the past fell prey. You can see it. So as a trader, whenever you're mapping out your supports and your resistances, always look out for those zones that broke out a little and went back in. Those are fake outs. So observe those fake out zones. Those zones are simply areas where the institutions have placed huge amounts of money and are looking forward to using it to grab out cash from retail traders. What I do in things like that is I put the dollar sign. I put the dollar sign because that simply means the idea it gives me is there is money here. Money is packed here. There's a lot of orders here. Okay. So once this breakout has occurred and you saw this massive bearish move, it means the institutions packed money there. All right. Went down and looking forward to coming back there in the nearest future to grab out the money they've packed. Okay. So when they came back there again, they packed the money they kept here in the past and used it to sell all the way down. So there's every tendency that the same thing might likely happen this time, or they might continue to the upside. Okay, so I don't advise you as a trader to use this area as your lookout zone, as a place you want to look out for as breakout and retest and move. If not, on the norms, this is what you should have just said. Okay, it has broken out. Just give me a retest like this and I will buy. Because if you go to the, let's say, 5-minute time frame, I just hope this line will be visible in the 5-minute time frame. So I will show you guys something there. Okay, good. Now in the 5-minute time frame, you guys can see clearly that this is a breakout. Yes, good. And a lot of traders now will begin to say, oh, just retest now, retest, and I'll buy, retest, retest. You understand? A lot of traders will say, oh, all I need now is just you to come back down, retest, and I'll buy. You might likely fall prey to it, you know, because of what has happened in the same zone in the past. I hope you guys are getting the idea. If you're getting the idea, just comment, I understand. If you're getting the idea, comment, I understand. So you don't want to use this side as a zone for your lookout of breakout and retest. It's dangerous so that you don't fall prey. Okay. Now let's just keep observing VIX 75 and see if it's going to break in back or if it's going to move back up. So as a trader, in order not to fall prey, is if you see that zone that the institutions have used to fake people out in the past, don't use it as your lookout zone or as a zone you want to use to say breakout and retest and I'll buy. So rather what you want to do is the simple technique that I've taught you, and which is what? Just map that zone out like this. Look for the highest high. This was the highest high so far. All right. And then this is your low where you have the resistance. So here is the highest high, right? So once you've mapped it out with two different lines, trend lines, you want to maybe use your box in case if you love using it. For me, I love using it because it beautifies my chart. All right. So now I have that place as a place my eyes is on. All right. My eyes is on it. I don't need someone to tell me if I look at my chart anytime. The moment I look at my chart, I understand what I've mapped out already. So instead of me using this zone for breakout and retest, I'll use the higher top of it, because I know that in the higher top of it, price has not come to it in the past. So breakout from here, retest for me successfully, and I will confidently look for my buying opportunity. So right now in the bullish bear, right now in the VIX 75 market, I'm not ready to do anything. Even if it's a whole day, I don't see a good entry, I'm not trading. All right. Even if it's in a whole day that I don't see anything, I'm not trading. The people in the community for the VIP, they pressurize me a lot. Anytime I don't see my good entries and I don't give a signal, they keep pressurizing. Team, no signal today, no signal today. And all those things are really getting me out of mind, you know. That's why I really want to drop the VIP signal for now and begin to focus on training traders more. So we'll keep looking, we'll come back to this VIX 7-5 and see if this was really another fake out or not. So let's go to boom and crash. Boom and crash. What market should we look at? Boom 500, boom 1000, crash. Which with the market? Just use your chat box. What should we use? What should we look out for, guys? Talk to me. I need the very first comment. The very first comment. And the very first comment. What market should we look at? Which of the boom and crash market should we look at? The very first comment was boom 500. Okay, so we go straight to boom 500. You know, I initially wanted us to go live by 7 p.m., but because I want to look into the currency pair market and what I want to trade this week. So that's why I decided, let me take you guys live earlier before then, because by then I would be going to my currency pairs. So let me see, boom 500. Still waiting for it to load. Who is drawing on my chart? Please kindly clean it up. Don't draw on my chart, okay? So, okay. All right, so boom 500, we go straight to 24-hour. What has boom been doing? Boom has been bearish. So if you want to trade boom and crash, boom 500 this week, I advise that you go bearish. But let's just see first of all. Boom actually has been bearish lately, in fact, massively bearish. It's been a very long time. Boom 500 has been bearish since 2020. Can you imagine? Which means there's always been few spikes in the boom 500. I actually don't even trade the boom 500. I can't remember when last I traded boom 500. It's either 1000 or 300s or crash more mainly. Okay, so let's see. Boom 500, we currently have here to be our lowest low, and price is already close to our lowest low. Is already close to our lowest low. So what will happen in the nearest future? Price might likely come here and hit here and go back up, or maybe here and continue, creating a double top at this zone. Okay, creating a double top to give strength, a bearish strength to push down at this zone. That's what price might likely do in the boom 500 markets. That is if it's unable to break out of here. All right, if price is unable to break out of here, that's what it might likely do, gain strength from here to push deep down. Okay, so already we have a picture of what is happening in boom 500 and what might likely happen next. So let's look for our highest high. This is our highest high so far here. All right, since 2022, okay, January. That has been our highest high so far. Now let's head straight to the 4-hour chart. 4-hour charts. Crash 500. My network is a bit slow. Okay, so reset. All right. So right here in the 4-hour charts, Remember what I told you guys, in every time frame, you want to ask yourself a question in that time frame. You don't just jump out of a time frame. If you don't see anything that you used to question yourself in that time frame, it means you did not analyze it well. So you must ask yourself, in fact, if you're unable to answer a question of any time frame you're coming from, it means you're confused about that chart. And if you're confused, don't trade it. You only want to trade a market that you are sure about and not a market you are confused about. Okay. So right in the 4-hour charts, we have here to be what? Hello. Price is getting close to this zone. So if price is unable to come down here, it's going to take days before price will actually get here. I'm trying to update people on Telegram. We are still join now. Okay, let's go back there. All right, so it's gonna take days before price would actually get here. Maybe like 1 or 2 days actually, before price can actually break out and get here, unless price finds strength here to push back up. And if it pushes back up, it's going straight to where I showed you guys earlier, which is going to be here. Okay, which is going to be here. So probably it might enter here, play around, and push back down, or maybe down here straight. Okay, so this zone is having cash. There is money sitting here. If price ever pushes back up to the zone, sell massively, sell massively. Okay, sell massively. Let me see. So what here in the 4-hour chart, we already don't have much things to look out for until price gets to this zone. Then we'll begin to talk of what might likely happen. Is it breaking out or is it going to push back up? There's nothing much to talk about in this time frame. So people joined. Okay. Let's look at the crash market. There's nothing much to talk about the boom 500 markets. Actually, I don't like trading these candlesticks. I prefer looking for a market that is on the spike side. Okay. So if you love trading candlesticks, this is what you should look out for. That means anytime soon spikes might begin in the crash 500 markets. And it's going to be a long-term spike because between here to here is about, let's see how many pips. It's about 328 pips. 328 pips. One wonderful pip to make from the crash 500 markets if it decides to start spiking to the upside. 328 pips. Wow. So anybody who catches the early move, that's cool. Let's see what's actually here. This is resistance here. And price has actually broken out of that zone. Let's see, let's see. This was a fake out. All right, price came down, moved back up, came here and fake people out. So what do I say? When you see fake outs like that, you do what? You drop a money sign there to remind you that here is a smart money play. All right, it's a smart money play. So that was a fake out. Simply means that this might likely be another new fake out. So this is also, this is you having a second confluence that price might likely start going bullishly. Spikes might likely begin anytime soon, especially when price gets to the resistance zone of it. Okay, so you just be on the lookout. So if you want to buy crash 500 this week, you only want to wait for price to break out, give you a retest, and then you buy. Okay, while you buy, you must remember the rule that I gave you, or the idea, and that is this. This is what is actually about to happen. All right. So it means if you cut the spike, it's going to be a long time move in the crash 500 markets. Which other market should I look out for? Let me see you. Crash 500. Someone said crash 500. So let's go to crash 500. Before we go to crash 500, let's go back to VIX 75 and see if that fake out was a real fake out or a fake out. A real fake out or a fake out. Wow, English. Let's see what's happening in VIX 75. I need network to be active than this. Come on. Boom, 300 to. Come on, price. What is this network? Please turn off your mic so you don't distract us, okay? Please turn off your mic. Turn off your mic, turn off your mic. What is happening here? Network. I'm having time. I think my network is having issue right now. Network is having issue on my browser, then how much more? Okay, let me see. Okay, VIX 75. I wanted to see something, what's happening in VIX 75. Let's see what's happening in 1 hour time frame. Okay. All right, we just have to redraw what we've drawn before. We had this here, and we had this here, right? Then we had this here. Okay, so it's clear that that was also another fake out, guys. We can see what has happened here. Look at the massive bearish move in VIX 75. All right, it was another fake out after two consecutive fake outs in VIX 75. This was another fake out. So imagine those who had relied on using this zone as their break and retest zone and to start buying, they would have fallen for the fake outs. Yes. So guys, I hope you're getting the ideas. I hope you guys are really getting the ideas that I'm sharing with you guys in order for you not to fall prey to this market smart move. So when you see fake outs like this, be careful of that zone in the nearest future. Be careful of that zone. It's very important. All right. So let's head straight to crash 300. Someone said crash 300. So for VIX 75, don't buy yet. There is no good buying signal yet. There's no good buying signal yet in VIX 75. All right, let's see what we can hold at hand for crash 300 this week. But one, crash 300 has been a downtrend, though range giving us some little funny range, but all the same, it's been a downtrend. What's this? Okay. It's been a downtrend. All right. So in crash, if you want to catch spikes, is for the selling side, right? Which means we have a lot of spikes to catch in crash 300. But let's see, first of all, let's see what's happening here. All right, we have what's happening in crash in the daily time frame currently. Price is actually on a range that's giving a fake out on this range here. That's giving a fake out that you want to be careful about. But though this is a daily time frame though, that's giving a fake out here. People thinking that it's time to catch spike. Anyway, it's a daily time frame because since it's a daily time frame, this candlestick alone is a lot of pips. Let me see how many pips that is. From here to here is about 636 pips. It's quite a good one. But if it was a lower time frame that you saw this, come on. But for the higher time frame, it's still a fake out, because for price to come out of this range after a long time and slope back into it, you need to be careful of that time frame. Okay, so right here we have this to be a range in the daily time frame. Let's go to 4-hour. Okay, in the 4-hour charts. After this long time range, let us see areas where there were likely fake outs. Let's see areas. Anyway, there's not much fake outs here until here. This is the fake out so far. But price might likely still break out, because this fake out, it was not even much a fake out. It was actually a real move. People caught pips from here, but price sloped back and broke back into this range again. So if you want to trade crash 300 this week, you only want to be sure that price breaks out of this line, because it's back to this zone. You can see the reaction is giving you some rejections. So you want to make sure that this nigger plays out of this zone, probably break out and gives you a successful retest. What it's actually trying to do is actually trying to gain retest in order to gain momentum to push down, but it's not getting that momentum. That is why trying to retest is being able to push back into the zone. That simply means the bears are not ready or strong enough to push down. So you only want to see yourself sell the crash 300 this week if the bears show you strength. And the strength you want to see is price break out of here, the retest successfully to the downside, then you sell. All right, you only want to sell if the bears really show you that retest. If they don't show it to you, don't sell yet. And I don't even advise you to buy. That is you trying to scalp, and it could be dangerous. Okay, so you want to stay out of 300 crash 300 for now till you see a successful selling opportunity. Okay, if you want to buy, then it simply means you just want to scalp, because this is a downtrending market. Then you want to look for maybe now that price has broken into here. In fact, it's really dangerous to scalp this right now. You know why I say so? One thing that a lot of traders always fall for is when they see this kind of range, they'll say, wow, let's be buying and selling here. It has ranged for a long time already. That is why it's breaking out finally and giving you some breakout moves, telling you, hey, something might likely happen soon. So since it has ranged for a long time, it's really going to be dangerous for you to scalp this market, because you can't tell what is happening. You understand? You really can't tell what will happen next. It could break out again. You could come back in. It could come, you think it wants to retest so that you buy and you see breakout again. It's dangerous right now. It's very dicey to scalp the crash 300 market. So my best advice for traders out there is wait for a successful breakout, retests, and look for your selling opportunity in crash 300. And even if I want to look for a buying opportunity in crash 300, I will make sure that I wait for price to go up, break out of here, retest before I look for buying opportunities. But I don't buy any of the crash. I don't buy crash and I don't sell boom. I love going for spikes because I don't have the time to wait for those candlesticks. So this is just what you need to look out for in crash 300 for the week. Wait for that breakout between 7968 and 9363 zone. Okay, those two zones are very, very, very important to wait for price to give you a true reaction. Analyze gold. We're going to go to currency pairs now because it's already getting time for me to analyze my currency pair markets. Okay, this is the time I love analyzing my currency pairs against the night because market starts by 12 a.m. Okay, so that's that for the volatility 75, crash 300, and crash 500 markets for the week. Okay, so you just want to be careful about this market till you see a successful breakout, and retest. Very, very important. You know, one reason why you always want to wait for retest. A trader asked me sometime, Tim, what's the significance about retest? What does it play in the market? The reason why you want to wait for retest is this. Let me give you a little illustration. If you have your here to be support, here to be resistance in the market, if you see price playing, let's say, a downtrending market, all right, price plays and hits support. Okay, it hits support according to the name, support. That means I support you to go back up. Okay, just get the logic of what I'm about to explain so that you understand the logic behind break and retest and its strength. I support you to go back up. If it gets to resistance, I resist you from, please turn off your mic, turn off your mic, turn off your mic, please, turn off your mic. Kindly turn off your mic, trader. All right. I'll clean that and start again. Please do not distract us with your mic, okay, please. I support you to go back up. Here says, I resist you to go back down. And support will say, what? I support you again to go back up. All right. This is the logic. Support is supporting to go back up. Resistance is resisting to go back down. Now, because of this support and resistance occurring in between this zone, that's when you have a range, meaning that price is not having a true direction, it's ranging. So if you must look for a selling opportunity, because this was actually a selling bearish markets before the range started, supporting and resisting, if you must continue selling, this is only what you want to see. You only want to see this guy who was a support, all right? You only want to see him turn to resistance. If he does not agree to turn to resistance, he's not your friend. You must understand that logic. If this guy does not agree to turn to resistance, he's not yet your friend. And if he's not your friend, you can't sell along. So the big boys in the market, what they will do is they will load money in these zones, these support zones. Okay. So for instance, they might load, let's say the load about, let's say the load to $3. I'm just giving you a little illustration so you understand how the market moves. They load $3 in this support zone. Why are they loading money there? They are loading money there because they want the market to be moved to a certain direction. So you guys must understand that as retail traders, we are not the ones moving the markets. Even if you have $10,000, your $10,000 is not enough to move these big financial markets. It takes huge amount of US dollars to move the markets. So you guys don't have any role to play. You know, when I started trading back then, those days, I used to be like, oh, everybody in the world is selling now. Let me sell, meaning we're going to move, the market is going to move down if I sell along with everybody selling. It does not move. We retail traders can't move the markets. Okay. So the big boys in the market who really move the market, this is what they do. They will load, let's say $3 on supports. And what if the idea is that they are loading this money for a bullish move at supports. So I'm putting the dollar sign above. Okay. It means that they have automatically said that whenever price comes back here, guy, push this market back up for me. That's what they're instructing Mr. Support. Okay. Mr. Support, they're instructing Mr. Support to push price back up for them. So Mr. Support takes the money. I say this is Mr. Support. Okay. Mr. Support takes the money and says, okay, $3. Wow, that's good. And I'll be ready to, I'll be willing to push market back up whenever it comes to me. I've accepted the $3. Now, the people playing against the supporters or the bears or the bulls, because these people playing from support to push market up are actually the bulls. Now, the bears in the market who wants to make money will come into the market, give Mr. Resistance. They will say, Mr. Resistance, I want you to push market down for me. Can you do that for me? Mr. Resistance will say, oh, I can actually do it if you can pay me. And I say, okay, you know what? I'll pay you $1. Remember, Mr. Support paid $3. That's more money, meaning more strength. Mr. Resistance is likely gonna say, oh, sorry, I can't accept $1 because it's stronger than me. $3 is stronger than what? $1. We all know. And if Mr. Resistance accepts this offer from the bears, this is what's going to happen. Boom. It's going to be a breakout. Okay. There's going to be a breakout. Why? Because the money from support is enough. But instead of us calling it money, we will talk in forex language, and we're going to say the volatility or the momentum from support is stronger than resistance, and that's why this breakout occurred. Okay. Now, why this $3 was pushed? Mr. Support took $1 from here, from support, used this other dollar here, okay, and used the $3 to defeat resistant man. And after he used the entire $3, there is no money left again to keep pushing. That is when you see things like this occur. Price breaks back in. Now, price breaks back in. Why? Because resistance has taken this money to push market back down. But why resistance took it and pushed market back down? There is no money to keep pushing. That's when you start noticing another range happening around here, indecision. Okay, indecision occurring until the bears come into the market again and say, guy, the 1,000 I gave you, the $1 I gave you, it wasn't enough, right? Okay, now I'm giving you let's say one, I'm giving you $2 to push deeper. I'm giving you $2 to push deeper. Now, if there is no bull here to push this market back up when it comes in the nearest future, this is what's going to happen. The bears will use this $2 to push. When I say $2, please understand that I mean huge amount of dollars. I'm just giving you a simple word, okay? They're going to push down, all right? Probably use this one here and use this one here to push down. Because the money is finished, you might likely see a range here. Now, if the bears end up coming back again and offers more dollars, that's they load more money to the bears and pushes down again, this is what you would see that will happen. So let's say the best gave more money. In fact, let's say they loaded with full force this time, about $4. All right. Then that is when you will see a massive breakout. Now, why the breakout? There will be a retest. Price would begin to push back down. Why is there a retest? Now, this is the logic. They use the first dollar to move. They use the first dollar here, the second dollar here to break out. When price came back, they used this other dollar to bribe support. Why? Because there was no bullish momentum. That is, there was no bullish presence. That means also that there was no bull to give money to this support to push back up. So the bears are actually going to be the ones to now bribe support, tell him, guy, please turn to resistance for me. And because he has seen money from the bears, this guy will accept to become a resistance. And then this money will continue pushing even deeper. Okay, so it is money that really moves this market. That's one thing you must understand. And number two is this supports and resistance is actually called demand and supply. Okay, this demand and supply are actually being given a huge amount of money to move the market in either direction. So it's now about who is richer. If the bears are richer on a Monday, the market will be massively bearish on that Monday. That is when you see a candlestick or a one-day candlestick being red. If the bulls have more money on a Tuesday, the bulls might likely push high on a Tuesday. And that's when maybe if you're looking out for only selling opportunity because the entire market actually is an overall bearish trend, that is when you see yourself not being able to find good entries, because in that day, the bulls had more money to push the market than the bears, even though it's an overall downtrend. But the bulls had more money. So you won't be able to see good selling entries. Then that's when you begin to say, oh, should I scalp? But I advise you as a trader is, if you don't see good entries, don't risk your hard-earned money. Leave the market for that day. The next day might be your day. Am I teaching somebody tonight? I hope someone is learning. I hope you're grabbing knowledge. If you're understanding, use the comment box. I want to make sure that everybody's active. Comment, I understand. Okay? So that is the logic behind support and resistance. It's about where money is loaded. How much is loaded there? If the support has more money loaded than the resistance, it means that the support will break out of resistance. That is the logic. All right. So do not fall prey to all these fake outs. I always say that I've also shown you guys, I've taught you guys some time ago how to know a strong support and resistance zone, because you cannot actually see the amount of money that was loaded on support. You can't see the amount of money that was loaded on resistance. So you use a technical idea to understand who is carrying more money. For you to know a strong support zone, you want to look for that zone that pushed market really high in the past. For you to know a strong resistance zone, you want to see that zone that pushed market really deep in the past. Okay. Maybe I'm going to drop the link of that video where I taught about how to know a strong support zone and resistance zone for you guys, so you use it to learn the logics behind support and resistance. So let me go straight to my currency pair. I've already showed you guys what to look out for in VIX 75, crash 300 and boom 300 this week. So you should know what to look out for there. And you can also make out time to analyze your other markets. The battery is low. How I wish I can get this on video to watch again. Yeah, it's being recorded. It's being recorded. So you're going to get it, okay? Now, for my currency pair, it's time to analyze my currency pair markets. Let me make sure that you guys are still seeing this. Okay, let me see. Sure. Okay, close yet. For my currency pair, actually this week I actually made quite a lot of pips from the currency pair markets. Let me see what the first section to open by 12 a.m. is the Asian session. So I should actually start analyzing my Asian session charts against the markets. You can see how stagnant the digits are. They are not moving, simply means that market has not opened yet. The market is just stagnant, simply means that market has not opened yet. Only the BTC is currently moving. So Bitcoin is Monday to Sunday. You can trade it anytime, any day. All right. AUD USD. I want to make this a new section. I want to make this video a new section for this currency pair. So traders, I'm going to stop the live view right now. Everybody, you're going to use the same link from the Telegram to join again. Okay, so that when I'm posting the video, this is going to be a separate video for currency pairs. Okay, so I'll end the video right now. Just join back with the same link again. Are you ready? Let's go.